Have you ever wondered what Forex trading is? Today, we'll unlock the mystery of Forex trading, also known as foreign exchange or FX trading. It's simply the conversion of one currency into another. It's a bustling market with individuals, companies, and banks carrying out around $6.6 trillion worth of Forex transactions every single day. Forex isn't just about practical currency conversion. The lion's share of currency conversion is undertaken by Forex traders to earn a profit. The sheer volume of daily currency conversion can cause some currencies to be extremely volatile. A factor to keep in mind before you dive into Forex trading. Now, you might be asking, what is a Forex pair? Well, a Forex pair consists of two currencies that are traded against each other. There are hundreds of different combinations to choose from. Some of the crowd pleasers include the euro against the US dollar, known as EUR-USD, the US dollar against the Japanese yen, dubbed USD-JPY, and the British pound against the US dollar, referred to as GBP-USD. In every Forex pair, there's a base currency and a quote currency. The base currency always takes the left spot and the quote is always on the right. The base currency is always equal to 1 and the quote currency is equal to the current quote price of the pair. This shows how many of the quote currency it'll cost to buy one of the base. So, when you're trading currency, you're always selling one to buy another. Moving on to the term pip in Forex. A pip in Forex is typically a one-digit movement in the fourth decimal place of a currency pair. For example, if GBP-USD moves from 1.35361 to 1.35371, it has moved a single pip. However, if you're trading JPY crosses, a pip is a change at the second decimal place. A price movement at the fifth decimal place is known as a pipette. Currencies are traded in lots, which are batches of currency used to standardize Forex trades. As Forex price movements are usually small, lots tend to be very large. For instance, a standard lot is 100,000 units of the base currency. To wrap things up, Forex trading is the conversion of one currency into another with the aim to earn a profit. A Forex pair consists of a base and a quote currency. A pip is a one-digit movement in the fourth decimal place of a currency pair, while a lot is a batch of currency used to standardize Forex trades. Remember, the Forex market can be volatile, and it's important to understand the nuances before you start trading. Happy trading!